All right. We should be good to go. Alright. Yo, what's good, y'all? This is your boy Jay DeVar bringing y'all another YouTube video. And honestly, bro, in this video, I'm actually going to be showing y'all how I made $600 using Ict'S silver bullet strategy. Last week during the NFP trading news, basically last Friday. Today is Monday, October 9th, and it's actually a holiday, so it's Columbus Day today in the US. So basically, the US banks are closed today, so this is why I haven't been trading on Monday, or I haven't traded today. But also too, like, I decided that I'm not gonna trade until I get my first payout, because like I said, I made $600 on my new funded account that I got through TFT. I got a 25K night challenge. So yeah, man, I just decided, like, hey, I want to just go ahead and get this first payout and get it rocking, because also too, this week is gonna be a pretty it's gonna be a pretty volatile week this week. I know we got CPI this week, and also we got Fed minutes later on this week. I want to say that's on Wednesday. So yeah, we got CPI, and then we got the Fed coming out this Wednesday, talking about if they're gonna raise the interest rates this week or this month or not, based off of last month's inflation data or last month's economic data. So yeah, y'all, with that being said, I'm gonna turn my camera off, and then I'm gonna just go ahead and break down like some of the trades that I took, or a couple of the trades that I took, and also break down my funded account also, so to show you guys, like, it's actually legit and everything of the sort. So but before we do that, please like the video, subscribe to the channel, and turn on the notification bell so you're notified whenever I do a new upload. So yeah, let's go ahead. I'm going and turn my camera off because I don't want anything to be obstructed. Gonna do that. There we go. All right, so here is my funded account right here. I'm gonna try my best not to show the account number, because I don't want anybody stealing my shit. You know what I mean? Not risking it. But we scroll down here, you can see starting balance 25,000 right here, right? So I've only I've had this account for about 5 days now, I want to say, because last week was my first actual time taking some trades on this account. So you see, the first day I took a trade, I actually had a loss of about 1%, nearly 1%. And then I actually started to make that back the following day, and then on Friday. So from Wednesday, Thursday, and Friday, that's when I basically made the $600. Wednesday and Thursday, I was trying to do, I wasn't doing the silver bullet because I was at work. So Wednesday and Thursday, I was doing more like the day trading on the hourly chart. I use Ict'S swing trading model that he taught in one of his core mentorship playlists, the swing trading. So I was using the monthly, weekly, daily, sequential, and basically I was taking my trades on the hourly chart. So I was basically day trading, looking to hold my trades for at least like 2 to 3 days at the most, instead of like actually like swing trading and holding for like a week or two. You know what I mean? So with the day trades on the hourly time frame, I'm trying to be out within the week. And then looking for another setup sometime next week. But me personally, how I use his silver bullet, I don't go any lower than the 5-minute time frame, because for some reason if I do go lower than the 5-minute, I'll do the 3-minute. But the 1-minute time frame, I just can't. It's just a lot of, on the 1 minute, it's just so many candles, and it's just, it moves back and forth so much. Cause like I could be targeting, say, liquidity that's way above here, or I could be targeting, like, just go to the chart. I could be targeting liquidity that's above here, and we ran this, and trying to capitalize on it from a 1-minute perspective. You know what I mean? It's kind of just like, there's just so many candles, and it kind of like just overloads my brain a bit, to where I'm just like, I don't know what to do, and I get anxious during my trades on the 1 minute. So I was just like, you know what? I'm kind of figuring out that the 5-minute is the lowest that I can do, possibly the 3-minute. So yeah, I just been finding that the 1-minute time frame just ain't for me. You know what I mean? Like, it's just not for me. But so I keep it to the 5, 15, and the 1 hour for my executions. I'll even do the 4 hour time frame executions also too. Because you can get some pretty decent day trades on the 4 hour also with some good risk reward. But continuing on, right now my win rate is 50%. Right, I want to say I've taken a total of 12 trades on here as far right now. But as far as the profit share, I got this account during a promotion they were having in September. Basically, it was about I got this account back in September. It took me the whole month to get funded because it's unlimited trading days, so there's no time limit or anything like that. So yeah, I got this account during a promotion. It was basically like a 90-10 profit split, 90% me, 10% them. So out of the $600 that I made, they're basically keeping 60 of it, and the 545 goes to me, right? So they took their 10%. Down here we have the trade metrics, the trade history. I want to say I've taken about 12 trades ago. This was the first trade I took, so it was about a little bit over a 1% loss, but I made it back the next day, the following day. And then over here, these trades you see right here, the smaller trades right here, these were basically on the this was basically on, what time was this on Friday? Because I don't know, that time does not look right, because I wasn't in military time. This is like 3 o'clock, 2 o'clock. I wasn't trading during this time. Where was I? Actually, yes, I was. I was in the no, this does not look right. This does not look right. But anyway, we're just gonna keep it going. Right here, I was basically cutting my losses. I was on the smaller time frame, like the 5 minute and the 3 minute. So basically, I was like cutting my losses short because NFP is a pretty volatile day. Although the stop hunt already took place at the 8:30 a.m. release time of the news event, it can still be pretty volatile. So I think at this point, I was basically just like, okay, so the stop loss that I have set, if it doesn't take off, right, I'm gonna just go ahead and like close it out, because I don't want to have to sit through too big of a loss. So that's still something that I'm working on in my development, getting better at calling the better executions and taking better trades. But these two right here, the 283 and the 271, these two trades right here is actually one trade altogether. It's just that during this runner where I had actually got in a good position right here, this trade, and I'm gonna show you, I have it marked out on my chart right here. That's what you see right here. But this trade right here in total was about $550 altogether. But what I did was, when it got to the 500 mark, I took half of it off because I was trying to target this area, or this this imbalance right here. This is actually a daily fair value gap. Right here, I had it marked on the Fibonacci retracement level. I can show you that a bit later, but basically I was targeting this imbalance right here. That's a daily fair value gap. I'm on a 1 hour time frame right now, but this is a daily fair value gap that was resting in between the 50% and the 61.8 retracement levels from the fib that I had drew. Because anything past this point is considered premium, and when we're in premium markets, that's technically where we can look for, if we're looking to go short, anything above 50% is premium. And so this is where we anticipate, we look for areas or premium discount arrays, or look for premium arrays that align with our bearish scenario. So if we close above this one, then we can consider this one an inversion fair value gap. And so like price closes above it after today, and then comes back and taps into the area as a form of like resistance or supply, and then heads higher into what we consider another imbalance up here, to potentially fill in another imbalance right here. So potentially can fill in another imbalance right here on the hourly time frame. And also too, for it to reach that imbalance, or CB, the sell side imbalance, buy side inefficiency, is because it has to close. It has to trigger this liquidity, this buy side liquidity that's resting right here, right? And so basically, if I see anything close above this in the next coming weeks, then I'll look to find a short position. If we close above here and don't have like, there's a couple more inefficiencies right here, but and a couple more PD arrays right here. But if we blow through all of that and then trigger the buy side liquidity, I think the buy side liquidity can head higher, or the market can head higher and tap into this imbalance right here before eventually it does sell off. Because at this point, this is like a high premium type of scenario, and I can show y'all that a bit later. Let's see if we already got. And I can show y'all that a bit later on in the video. Right now, I'm gonna mark this as 1 hour. Already got. Then I'll get back to that. But yeah. So these two right here, these were all one trade. That I just took half of the position off and let them. I was gonna subscribe to letting the rest of it run, but ultimately I didn't hold until the target that I was looking for, which was right here at about the 14,980 level. This line that I have marked right here at the 14,920, that's actually where I had got out, and I went ahead and like took the trade off, because at this point, like, I was riding the move like this entire run right here, and it's just like, I kind of figured that if it did trigger this buy side liquidity, that it would run for this fair value gap right here that's on the daily. But I just mentally I just couldn't hold for it, because I didn't want to like lose my gain. So although I did take some of the trade off like halfway through, eventually I did end up just closing here just shy of it. So if I would have held the entire trade, it would have been a 1 to 3 to 1, but where I closed it was a 1 to 2, almost a 1 to 3. So you still can't complain. I really can't complain about that, and that's what I was doing on Friday after I went ahead and closed the trade out. I was just thinking to myself, man, like, either way I made $600, and this trade right here, that was $138. This was another little add-on position. I have that one marked right here. Right, so this one was a 1 to 3, so it was just a little smaller position that I had added, stacked into it, and yeah, that one is marked out right here, and I'll break down why I took that trade. So yeah, that's the account dashboard right there. I made about, these are the trades I made like $600 on. You know what I mean? So I'm gonna go ahead and break down into the chart, and I actually, this is also for studying purposes also. Why I have it marked like this. You see, I actually have it marked right here, where at the NF, so last week I said it was NFP. We go back last Friday, the 6th, that's where I took those executions. You see right here, these were taken on the 6th. So I was trading into about the noon lunch hour session, but I was in the trade around like 10 o'clock. I took the trades around like 10 o'clock, and I basically just held them for the entire day, which I don't mind doing at all, especially like given the conditions where we had already, like, as you can see right here, the note that I have, NFP, this candle right here says 8 o'clock, but if I go down to the 15 minutes, right, we look at this. Now it said, now this entire candle right here is 8:30. So 8:30 was the actual release for the non-farm employment change. You can see right there. And this is normally regarded as a super volatile type of event. So yeah, ICT recommended that. So a lot of people get this confusing too. ICT never said don't trade NFP or don't trade on Friday of NFP, which occurs the first Friday of every new month. He said don't be in the market around 8:30 when the news actually comes out, because you don't know where it's gonna go. Like at 8:30, it possibly could have went ahead and went for this liquidity, buy side liquidity that was resting right here, and tapped into this and tapped into the daily fair value gap that I already had marked right here. It could have went this way, and then if it did, then my idea would have been, okay, well now we're finna target the liquidity that's resting here, and possibly tap deeper into this weekly fair value gap that's marked right here. You can't see it, but I have some text. Yep, see weekly fair value gap. Ultimately, this is the area in the next coming months that I'm looking to target, and that's why if we actually get to the imbalance that's resting up here, this imbalance right here, or this fair value gap right here, if we get here, then I'm gonna be targeting here, because like this is ultimately where, or I want to see something that shows some indication that like, okay, smart money has tapped into this 1 hour fair value gap or sell side imbalance, buy side inefficiency. We finally tapped here, right? And then I want to see some type of like indication that now they want to start heading lower or shift from like buying to now selling, right? Because remember what I said, now here we're in the premium area of high premium, and that's what I'm gonna go ahead and show y'all that fib that I had drew really quick. So basically I draw a fib from this high, because this high right here is the high that caused the shift lower that broke this low and broke this low and created a new one. So from this high right here to this low right here, you see I have it marked. Honestly, I really do hope y'all can see it. Okay, here we go. So as you can see right here, that daily fair value gap right here. Yep, the one that sees right here. It aligns perfectly with the 50% area, the 50% retracement zone in the Fibonacci retracement tool. And basically this right here, the 50% is equilibrium. So from this low going up to the 50% area, this right here is basically equilibrium. And because this was a bearish price swing, anything above 50% is a premium, because when things are more expensive, what tends to happen is the demand for it starts to slow down, the supply of it increases, and then basically from there, if you own something or if you're selling something, if you want people to continue buying it, you're basically going to have to lower your prices to incentivize people to buy, because at some point something's going to get so expensive to where people are just like, I'm not paying that. You know what I mean? And so like, if you need to move inventory and you got all this supply and you need to make room, that's generally when you see things go on sale, right? That's generally when you see things go on sale. So that's why the fair value gap that's right here, you see that 1 hour fair value gap? There's a 1 hour fair value gap here, and then there's also a daily one right here where that buy side liquidity is resting. So I'll be looking to target the daily one first before looking at the hourly one. But the hourly one sits in an area of like high premium, right? And so yeah, so the 1 hour one sits in the area of like high premium, but the daily one sits at right around in between like that 70.5 and 78.6 area. And that's basically ICT's optimal trade entry area right here. If it gets to the 886, then potentially, like if it closes above the 886 level and shows that it wants to go higher, then basically you can like scrap this entire idea, and look for retracements down and possibly heading higher. But if it doesn't get above this one, like it can tap into this one and hit above this one, but there's, like I said, there's another imbalance on the smaller time frame right here that it'll have to get through. So basically, like this is two like confluences that can indicate lower prices if price does head up to this level in like the coming months or the coming weeks of October. So yeah, there's that. So now we're actually gonna get into the silver bullet, or how I was applying the silver bullet strategy. So as you can see right here, like I had it marked out earlier, the NFP 830 news drove price down into a 1 hour fair value gap that then gave the green light for buy side liquidity to be ran. And for those who don't know, or for those who may be struggling with ICT, the silver bullet strategy, this is how I heard ICT explain it on one of his Twitter Spaces. basically saying that all that the silver bullet is a retracement into a 1 hour fair value gap, that after it retraces into it, it runs some liquidity, whether it be buy side or sell side liquidity. In this case, it ran sell side liquidity, right? Because now we're on the hourly time frame, and at 8:30, that news driver went low. That news came down here and tapped into this 1 hour fair value gap that was resting right here, right? That's why I marked it gold, right? As you can see, at 8:30, instantly, just whipsaw went straight forward, took out sell side liquidity on the 1 hour, and tapped into a 1 hour fair value gap, right? Or a buy side imbalance, sell side inefficiency. Tapped into it. After that, it started to make its way higher, right? It started to make its way higher, or price started to shift, and from this point here. But then again, like I said, NFP is a volatile news event, so ICT also recommended that if you're gonna trade on Friday, you want to wait at least 30 minutes to an hour after the false move has basically happened. And in this case, at 8:30, it happened, and after 8:30, around 9:30 or 9 o'clock, price started to shift, and then the 9:30, it started to whipsaw a bit. And as we get down into the lower time frames, I'll show you why. You see it right here. But when I get to the 5 minute and the 3 minute, that'll really be like where my execution was. I didn't do it on the 1 minute because, like I said, imagine this counter right here at 9:30. Imagine being in a 1 minute execution and you see this happening, right? Now, granted, on the 1 minute, you don't have to target the entire move, but that's just how I want to trade. I want to take the entire move. That's just how I want to trade. But hey, like I said, like this is also for studying purposes. I put this in my trading journal on Notion. So I put this in my trading journal on Notion, so I can go back and look at this and see, like if there's any changes that I want to make, I can go do that, obviously, But this entire thing is in my journal. So if I want to change that later down the line, I can. You know what I mean? But as I was saying, so the 1 hour fair value gap was tapped into. 1 hour sell side liquidity ran fair value gap. All the silver bullet is, according to ICT, is a retracement into a fair value gap that triggers liquidity. In this case, because I was anticipating bullish, or anticipating this liquidity to be taken out and this inefficiency to be tapped into, we will wait for sell side liquidity to be ran, and then potentially price dig into a inefficiency below that sell side liquidity, right? Which is exactly what happened here, right? This 1 hour fair value gap was the only fair value gap that hasn't been tapped into. This was the only inefficiency that was resting down in here. So tapped into it. Now we have the bias, and then we see like some market structure shifts. You'll see that when I go lower on the lower time frames. But you see that, and now this basically indicates higher prices, or a run for the liquidity that's resting here, and then possibly into the inefficiency, right? But as I look at it now, it's probably for the best that I did close here, because like I said, my anxiety was through the roof when it got here. I was like, oh, is it gonna keep heading higher into the inefficiency? It should, it should head a little higher, but you know what I mean. So, like I said, I'm not too mad about it. It was $600 either way, and then with my profit split, I get a refund also. So we'll see how that goes. I'm gonna get that this week. I'm also making a video on that, show you guys that. But so we tap into the fair value gap, and we're looking for this buy side liquidity at the 14,920 level to be taken, right? So now we're gonna go down to the 5 minute, because I want to say this is where I actually took the trade on the 5 minute. Yep, here we go. Look at that. I'm gonna lock this really quick, and then we're just gonna zoom in to right here, right? So as you can see right here, right, this is the hourly sell side liquidity right here. That's this right here. That was taken. Tap into the 1 hour, right? Then we see a shift, right? As soon as we see the market close above this high right here, this lower high that was formed right here. Honestly, this right here could have been my first entry, but at this time I fell asleep and I woke back up at like 10 o'clock. I woke back up at like 10 and I looked, I was like, oh shit, wait a minute. All right, let's go ahead and get up. Silver bullet time. Because like, as you all can see right here, like, so I have the 10 o'clock and the 11 o'clock hours marked out because this is one of the silver bullet entries or entry time frames right here. So I'm glad I woke up around 10 o'clock, and I immediately got on my phone. I was looking for it, and lo and behold, another trading pattern actually opened up. So lucky me that day, right? But if I was up, this could have been another entry right here. Basically, you see, remember it broke above this higher low right here. So when you see that, that's a market structure shift, right? So we're gonna call this type in MSS, right? Market structure shift. So as it does the market structure shift, it has to leave a fair value gap, right? Where did it leave it? It left one here and it left one here. You can enter on this one, right? As I was instructed in like the 2022 mentorship, you can enter if it forms two fair value gaps in whatever scenario. If you see two fair value gaps form, you can take the first one, right? Because you can take the first one and not worry about this one. But if you take the first one, you have to have the stop loss below here, right? Because as you can see, if I would have took this fair value gap entry right here, if I would have took this one and then had my stop loss here, the stop loss would have been ran because there's another fair value gap resting right here, right? And the reason why, he says you can take the first one because there's times where it hits the first fair value gap or the closest one and then takes off, and then it just leaves this one open, right? So if you want to go ahead and get in, okay, you can get in at the first one, but your stop loss has to be here, right? So if I wanted to get in on this one, my stop loss would have had to been right here, below the low right here. Would have been right here below here, right? Or you can move it here or here if you want to, but just for safety reasons, right here if you don't want to be stopped out, right? And then you can target this liquidity right here, right? You can target this one, but the one I wanted to target was up here, was right here, and then up here, because I just subscribed to the idea of like, okay, if there's any day, because I was looking for this level right here to be taken out and this inefficiency to be tapped into for like the past month and a half. So from September to now October, I was already anticipating that to be hit. And honestly, when I seen this happen, I was like, okay, if there's any day for them to do this, it's today. Right? So I kind of like subscribed to that idea, and thankfully it worked out, right? But yeah, right here, I could have took the first fair value gap if I was up during that time, and also this is for learning purposes too. This is for anybody who wants to trade ICT concepts and trade the silver bullet, or just trade his 2022 mentorship idea. 2022 mentorship, these are the entries. This is a good entry. Silver bullet is from 10 to 11, either from a fair value gap that forms in between the 10 to 11 window, or a fair value gap that forms before 10 o'clock. But when 10 o'clock hits, it can see a movement into any fair value gap that was formed before 10 o'clock, right? But during that 10 o'clock to 11 o'clock window, that's where you want to be trading silver bullet. That's just one. You can trade the silver bullet also from 2 a.m. to 3 a.m. That's the London session. The New York session is 10 a.m. to 11 a.m. The New York lunch session is 2 p.m. to 3 p.m. right? And there isn't really one for Asian session because Asian session doesn't really move a lot. But to get back to the topic at hand, so I wasn't awake for any of these, right? I wasn't awake for any of these right here, right? So I wasn't able to take any of these entries right here. But if I was up, I gladly would have took them. But I probably wouldn't have been aiming so high because, like I said, yeah, that's just how I want to trade, man. But hey, hopefully in time that may change. But as of right now, that's how I'm going about it. Y'all can stick around for that journey. But So as you can see right here, right, liquidity right here, my bad, market structure shift, retracement back down into the lower fair value gap, and then we see it heading higher and higher, or we see it heading higher. So since this looks like this, I want to say I took this on the 3-minute chart. Let's see if it's looking like that, because for some reason, let's see. Okay, yeah, it was a 3-minute. So as you can see right here also, move this sell side liquidity up. So remember what I said earlier, if we're anticipating bullish price action, we want to see liquidity be ran, preferably to the sell side. So we want to see sell side liquidity ran, which is on the 3-minute time frame. This low right here, you see these relative equal lows right here, right? This could be considered sell side liquidity on a lower time frame. So in this case, this is the 3-minute time frame. So in the 3-minute time frame, these relative equal lows right here, that's how you can tell where liquidity may be resting. It can be a single low also. It can be a single low or high. Like in this case, this is a single high. This is a single high, right? But where you see areas of like relative equal highs or lows, so like two lows put together, in this case, they're like relatively close to each other. One thing that I remember from hearing one of ICT's Twitter Spaces where he was, giving a lecture, he was basically talking about liquidity concepts and saying that, wherever you see relative equal lows, those are the liquidity zones that you really want to pay attention to, because those are the areas most likely wanted to be hit. Because feel free to write this down. He said that smooth edges love to be made jagged, right? So areas like this, where you see two relative equal lows, or it could be relative equal highs, areas you see like this, right? Because in these cases, they're both bullish candles, right? So two lows made from two bullish candles, right? This is where sell side liquidity is resting. Somebody might be asking a question like, oh, well, why wouldn't you consider this liquidity? It is liquidity, but we want to see higher prices, so we want to see sell side taken, right? Sell side was taken here at 10:06, so going into the 10 o'clock, 11 o'clock a.m. Silver bullet session. Going into this time, low liquidity was taken. We headed higher. What did it leave? Fair value gap. What did it leave? A fair value gap. It left a fair value gap. I'm just refining it down to the 3-minute, right? But on the 5-minute, it's a bit bigger, so it's a bigger one, right? There we go. It left a fair value gap. Yep, it left a fair value gap. Look at the 3 minutes. Left a fair value gap. Right, you can find it if you want to, you don't have to. But it left a fair value gap. Also, what's resting here is another confirmation is we have a breaker. We have a breaker block. So we have a bullish breaker block because we had a high, low, higher high, liquidity ran, price closed above it. So this would be considered a breaker block or a bullish breaker block in this case, because we have a high, low, and a higher high, slight higher high, liquidity ran, price runs above it, breaks this high right here. In this case right here, this indicates a market structure shift, right? So we have a fair value gap, market structure shift, sell side liquidity was ran, and then also we have a breaker. So we have 4 indications or indicators or confluences lined up right here to basically tell us, or give us the green light that okay, this thing's gonna take off, right? So that's exactly what I did. I entered right here at this fair value gap. I was holding the trade, and as you can see right here, I have this area right here marked out because this is also a bullish breaker, right? Because on the 15-minute, right, going before the 8:30, right, you see right here, the 8:30 NFP news came out. It created a order block, right? But since we're looking forward to this being taken, or this buy side liquidity up here to be taken on the 1 hour, right? We want to see it close above this, and if it does, it forms a breaker because we have a high, low, higher high, right? Higher high, because this high on the bullish candle is bigger than this one on the bearish one, and we see a liquidity raid. So sell side liquidity is taken right here, but it just ran through. Then this liquidity is taken, and now we see higher prices. That this can be considered a breaker block. So as you can see, we closed above it, right? Came down. I want to say we slightly tapped into it, or might have not tapped into it. But either way, it closed above here, and this gave me the indication that, like, okay, it wants to make high for this. This is why I took a trade entry right here at this breaker, because I saw that there were certain signatures there that kind of like gave me the green light that, okay, we're good. It's gonna head higher, because as you can see right here, right, we have a breaker, then we have a high, we have sell side liquidity, ran down in here. It refused to head lower, and also too, it tapped into another fair value gap that was formed right here on the 3 minute. So I have another fair value gap right there, 3 minute. Could have took that one too, but I would have had to place the stop loss way below here, because look at all these fair value gaps right here. In this case, this one right here is a breakaway gap. And that's another thing I remember in ICT's teachings in his Twitter spaces. If this right here is considered a breakaway gap because there was no return to it, prices kept heading higher and formed other fair value gaps. So this one can be considered a breakaway gap. This can be returned to later, right? But as of right now, whenever you see a breakaway gap, basically, he said that gives the green light that this is gonna head higher, right? So this was also another thing that I had saw that kind of like let me know that, okay, we should really see higher prices now, right? Because when you see breakaway gaps form in a certain direction, you can generally be certain that, like, it's going to keep running in that direction. It's going to strongly run in the respective direction, and that's exactly what continued to happen. Ran above this breaker, right? Not only did it run above the breaker, but we have a high, low, higher high, low, liquidity ran to. It doesn't have to necessarily close below it, but it can like still hit the wick, right? Or there's like some low. Oh yeah, there's a low right here that was taken out, so that can be considered the sell side liquidity, right? I'm pretty sure we go on like a 3 minute time frame, right? Or you can go down to a 1 minute time frame. Let's see. Oh yeah, relative equal lows right there. Back up, back up. Back up, back up, back up, back up. Yep, okay, so in this case we had a single low that was ran. You know, so we had a single low here, it was ran. That sell side liquidity taken. Then we have market structure shift up here. Broke above this high, market structure shift. Let me go ahead and lock this one too. Let me go back to the 5 minute, because I think that's where I actually took the execution. No, it was on 3 minute execution. Right. So here, above the breaker, or inside the breaker, we had a lower close inside the breaker. Market structure shift above this high right here. Fair value gap was also left. Right here, fair value got left right here, right? So you can enter here, but for some reason it's showing that I entered here. I'm not sure if it's because of the MT5 server or the broker I was using. Maybe that's accounted for like as like the slippage, or that might be the slippage. But you can take this trade. I took this trade here, right, at the breaker, headed higher, and we were good to go. Right, this one right here, I closed it, or it was near this liquidity right here, this high right here. Right, it might be due to slippage also, but yeah, I ran it here. This one was a 1 to 3, and this one was a 1 to 2 because I closed right here. So to here it was like 1.275, almost 1 to 3. But yeah, there you guys have it. That's the silver bullet right there. And I just added a position while it was making this run higher. It broke above this breaker on the 15-minute breaker, and you know it never closed below, or it didn't close below or show any indication that it wanted to head lower. So we just kept rocking, and thankfully our ideas panned out. So there you guys go. If you guys enjoyed this video, if you learned anything, please leave a comment down below. If you enjoyed the video, also let me know too, and you know, leave a like, subscribe to the channel. And yeah, the next video that I do, I'll be showing you guys like the payout, because I'm gonna request the payout this following week. I'm gonna go ahead and request the payout because I want to just get paid right now. Like, I want to see the money actually hit my bank account, and I can go, okay, yeah, this trading shit really works. You know what I mean? So that's why I'm not trading this week until I get my first payout. Right, but with that being said, this is Jay Davari signing out, and y'all be good, man. I'll see y'all in the next one. Peace.